All right, let's just dive right into this. If you've been sitting there feeling like it's literally harder than ever just to get by right now, well, you're not crazy, and you are definitely not alone. In this explainer, we're going to be looking at a completely staggering, undeniable reality: the 2026 American wealth crisis. 88 million? Think about that for a second. 88 million Americans are currently sitting in a financial crisis right now. And hey, this isn't just some wild guess. This is brand new data showing that this terrifying number has jumped 55% just since 2021. I mean, to put that into perspective, more people are broke today than at almost any point in recent history. So why do things feel so tight? Well, it honestly comes down to one massive, frankly scary number: $18.33 trillion. That is the collective debt we Americans are dragging around right now. And look, it's not just debt, it is incredibly toxic debt. Because credit card interest rates, they're averaging over 21% right now, with some even pushing almost 30. No wonder over 60% of people, and yeah, that includes people making over 100 grand a year, are stuck living paycheck to paycheck. Let's actually break that down into people, though. This means 34%, so roughly 1 in every 3 people of the entire US population is actively struggling. So honestly, if you're feeling the squeeze right now, this completely validates your exact experience. The math simply isn't working for the average person anymore. It's just broken. So here's our agenda for today to help sort this out. 1, the 2026 crisis. 2, the 5 wealth traps. 3, the 5-step escape plan. And finally, 4, the 5-day action timeline. All right, let's get into part 1. The 5 wealth traps. Systemic designs keeping you broke. Okay, trap number 1 is what we call the minimum payment trap. This right here is what's driving our $1.2 trillion in national credit card debt. Now, think of a credit card like a treadmill, okay? You're sweating, you're running, you are working incredibly hard to make that minimum payment every month, but you're moving 0 steps forward. Why? Because the billion-dollar credit card company literally controls the speed of the treadmill. They calculate that minimum payment specifically so you just keep paying them 21% interest forever without actually making a dent in your balance. It is a completely rigged game, and it is incredibly frustrating. Trap number 2 is lifestyle inflation. Think of your bank account kind of like a leaky bucket. When you get a raise or a nice promotion, you naturally pour more water, more income into the bucket. But instead of the water level actually rising, the holes at the bottom just expand. You upgrade your car, maybe you move to a bigger apartment, largely, let's be real, because social media pressures us to keep up with everyone else. So your income goes up, but the bucket, it just stays empty. Trap number 3 is just staggering. 23. That is the total number of US states that require any personal finance education in high school. Less than half the country. What that means is the vast majority of us enter adulthood flying completely blind when it comes to budgeting, investing, or, compound interest. Meanwhile, the big banks are spending billions teaching you exactly how to borrow. It's a system designed to profit directly from our lack of financial education. Trap number 4 is the massive, unavoidable rise in the cost of living. Listen to this. Since 2020, rent has increased 30 to 50% in most major cities. Groceries, insurance, healthcare, literally all of it is surging. And wage growth? Yeah, it just hasn't kept up. So mathematically speaking, a paycheck that covered your expenses super comfortably back in 2021 completely fails in 2026. And then trap number 5 comes down to our daily habits. See, the wealthy consistently invest in low-cost index funds. And if you're new to that term, an index fund is basically just a basket holding tiny pieces of hundreds of successful companies. But the rest of us, we tend to keep our money in checking accounts, earning absolutely nothing. Right now, only 62% of Americans actually own any stock. If you aren't investing, your money is literally losing its value to inflation every single year. You're going backwards. Which brings us to the ultimate wealth-building tool that so many of us just miss out on, and that is compound interest. Let's think of this like planting an apple tree. Initially, you're just planting a little $50 seed. You water it and, well, you wait. But eventually that tree grows and it starts dropping its own seeds, growing an entire orchard for you without you having to do any extra physical labor. That's exactly what compound interest does for your money over a few decades. It does the heavy lifting for you. Now let's move to part 2, the 5-step escape plan, your mathematical way out. Here is your exact step-by-step roadmap to reclaim your wealth. 1. Cut non-essential spending. 2. Build a $2K emergency fund. 3. Attack high-interest debt. 4, create extra income. And 5, start investing. All right, let's dig into steps 1, 2, and 4 for a second, because these are all about taking back control of your cash flow. First up, comb through your bank statements and just cancel those unused weekly subscriptions. I know it sounds small, but this alone usually frees up $200 to $400 a month. Next, automate $100 a week into a high-yield savings account. And honestly, that's just a regular bank account that actually pays you a decent chunk of money just for keeping your cash sitting there. This builds up your emergency fund so you don't instantly fall back into debt the second an unexpected expense, like a car repair, hits. And to really speed things up, create some extra income. Starting a $300 to $500 a month side hustle, freelancing, flipping items, or doing delivery apps, dramatically accelerates your entire escape plan. Then we hit step 3, which is absolutely crucial. Attack high-interest debt using what's called the avalanche method. This means listing all your debts by their interest rate and throwing every extra dollar at the highest rate first. Think of your debt like a house fire. You wouldn't waste your precious water spraying the small bushes in the yard, right? No, you aim the hose directly at the biggest, hottest flames first, so the house doesn't burn down. Mathematically, the avalanche method stops the biggest flames and saves you the absolute most money. And that brings us to step 5, start investing, even if it is literally only $50 a month. Hear me on this. Do not wait until you are completely debt-free. You want to open a Roth IRA, which is essentially a tax-free bucket for your retirement money, and buy a broad index fund like VTI. That's kind of like buying a sample platter of the entire stock market. Going back to our apple tree analogy from earlier, you have to get that seed in the ground right now so compound interest can start doing the hard work immediately. Just set up an automatic monthly investment and let it do its thing. All right, moving on to our final section, the 5-day action timeline, what to do this week. Look at how simple and manageable this daunting task actually becomes when we just break it down day by day. Monday, cancel those unused subscriptions. Just do it. Tuesday, open your high-yield savings account and set up that $100 weekly auto transfer. Wednesday, list out all your debts and interest rates for your avalanche strategy. Thursday, take an hour and research one side hustle you can realistically start this weekend. And Friday, open that Roth IRA and invest your very first $50. See? We can actually do this. The 88 million Americans struggling in 2026 have one big thing in common. They failed to make a plan. But you just got yours. The tools exist, and the knowledge is sitting right here in front of you. So I'm going to leave you with this question. Which of the 5 escape steps will you start today? Honestly, don't just scroll on to the next thing. Take action, follow this timeline, and start changing your financial trajectory right now.